Afternoon and welcome. I want to say good afternoon and welcome to everyone this lovely day. The weather has been a bit bipolar. It was a lot of sun and then it went cool and all of that, but it's a beautiful day all the same because it's a day to get knowledge about something important to you. So thank you very much. My name is Ugo Crisaluta. I'm the Vice President of Nigerians in the region of Waterloo, NIROW. And on behalf of NIROW and the network of Nigerians in Canada, I'm very proud to welcome you to this tax clinic, to this webinar entitled Tax Filing Made Simple. I really want to celebrate NNC and NIROW for taking the time to organize sessions like this that they say information is king, information is power, that bring information to your doorsteps, to your fingertips, and empower you to do things for yourself, empower you to be a proper citizen and resident of the place that you've chosen to call home. Without further ado, I will go straight talk about what we're going to do today very quickly. We were done with the opening address and introductions. We're going to talk about, go through the land acknowledgement, and then I will introduce our speaker for the day. So the region of Waterloo is situated on the Haldeman Tract, land that was granted to the Haudenosaunee of the Six Nations of the Grand River, and are within the territory of the neutral Anishinaabe and Haudenosaunee peoples. We acknowledge the lands in and around the GTA are the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabeg, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. We also acknowledge that these lands are covered by Treaty 13 with the Mississaugas of the Credit. And now we will unveil our speaker for today. Our speaker is Oluseyi Oluwokere. He's a chartered public accountant. He's the founder of Accurate Consult. He has over 14 years experience in tax preparation, filing, bookkeeping, business plan writing, financial reporting and control, financial planning and analysis, financial modeling and forecasting, budgetary control, performance management, expense analytics, project management, and business development. Anything that has to do with money, this is your man. He has consulted and worked across several industries, which include financial services, manufacturing, power, and oil and gas. He's trained in Canadian income tax by H&R Block and has many years working experience with the same tax firm. Oluseyi is passionate about helping individuals and small businesses optimize their tax deductions to build sustainable wealth. I can testify to this personally because he's helped me manage my taxes since my very first tax season in Canada. So without further ado, I'd like to invite Oluseyi to unmute himself, turn on his camera, and take the webinar to the road. Thank you very much.
Yeah, good afternoon, everyone. Can you all hear me?
Yes.
Okay.
I've stopped sharing, so you can share.
Yeah, can you see my screen?
Absolutely.
Yes, we can.
Okay, I'm trying. Okay. Yeah, once again, good afternoon, everyone. Thank you for the opportunity to share with you guys on personal income tax filing. So today, it will be a short presentation so that we can have enough time for questions and answers. So this is the context of the presentation, which you file income tax filing. I'm aware that we have a diverse audience, people that are new to the Canadian income tax system and people that are familiar with the system. So the presentation try to address both type of audience. So who should file income tax? How is your tax refund being calculated? Tax reductions and credits, then the tax filing deadlines, and the common myth about income tax. So this slide is on personal income tax filing and what type of income should be reported. Now, for those that are new, you are required to file income tax if you reside in Canada in 2024. So what the tax law implies is that even if you arrived in Canada on the last day, which is December 31st, 2024, you are required to file income tax if you fall within this category. Either you are a personal resident, permanent resident, citizen, you are a refugee, or you have work permit, or you are a student, you are required to file your income tax if you reside in Canada as of the last day of the year. And of course, if you want to get a refund, if you want, for students, if you want your tuition credit to be carried forward, then you need to file your income tax. We will still be talking about all the available credit. Now, this slide also try to address some common concern that relates to people that arrive Canada in 2024. If you immigrate in 2024, then you might want to pay attention to this. So the first item I have here is if you arrived in Canada in 2024 before the end of the year, for example, if you arrived September 1st, 2024. So there's what we call reportable income and taxable income. Reportable income is income that should be reported, but it's not necessarily that it will be taxed. You are required to report the income, but the government will not tax such income. Now, for example, let's assume you come from Nigeria and you arrive September 1st. So the income you earn in Nigeria between January 1st and 31st, 2024, that is the reportable income. So when you are filing your income tax, you need to get that information ready because your tax preparer will need that information. The income you earn before you arrive in Canada, then the income you earn after arriving in Canada, that is between September 1st now to end of December. So like the income you earn before you arrived is reportable, but it's not taxable. But the income you earn after arriving in Canada, after becoming a resident of Canada, then that will be taxable, of course. That will be what the information that will be provided on your T4 and other tax slips. Now, also in Canada, what is taxed is your worldwide income. Even today, if you are earning income in Canada and you're still earning income in other parts of the world, you are supposed to declare your worldwide income. So if you have side gigs maybe in Nigeria or other parts of the world, that should be considered when you are filing your income tax for 2024. Now, for married couple that their spouse is not a resident, maybe your spouse is still in Nigeria. Now, to calculate some tax benefits, they need the information on the annual income earned by your spouse, either in Nigeria or in other parts of the world for the year 2020, for the full year annual income. That information will be needed. So you need to gather that information. Either you need to get it from your spouse. You're moving to the next slide. Now, what we do during the annual personal income tax filing, basically that is between beginning of March till end of April, beginning of March till end of April. Now, the process is about reconciliation of the income tax that you have paid. Now, reconciliation in terms of the income tax that you have paid versus what you should have paid. Now, the income tax you have paid relates to amount that has been deducted from your salary income and other income sources from your maybe biweekly salary payment. That's income tax that you have paid from source. But what you should have paid is based on your taxable income and the tax credit. We have what they call tax credit that is available to you. Now it's a credit in the sense that they'll reduce the amount of tax you should pay. So what we do here during this process is reconciliation of what you should have paid versus what you have paid. Now, this table try to explain the calculation process on how your income tax refund or owing is determined. And I'm going to go through each of these components in the course of the presentation. But all your income, your salary income, plus other personal income, your business income, if you have a taxi, business income over Lyft, all other income, even if you sell your personal car or you sell a personal property, the income is taxable. The expectation is that everything you earn is taxable, either online or offline. Income tax is taxable. So that gives a total income, then less your tax deductions. So we're going to look at all the components of the tax deductions. So your total income minus tax deductions will give your net income. Then plus other income will give your taxable income. This income is the key income, is a key driver. This drives the income tax you're going to pay. That's why it's called taxable income. Now, based on your taxable income, a rate will be applied. So in Canada, what is applicable is what we call a marginal tax rate system, along the progressive tax system. Now, if your taxable income, I'm looking at this taxable income now, if your taxable income is less than this amount, 50,197, 50,197, 50,197, then this is the federal rate that we apply on it. So 15% times the taxable income. That is your federal tax payable. For us in Kitchener, of course, we're in Ontario. The Ontario government will also charge 5.1% on this. So 15% plus 5.1% is around 20.1%, which is approximately 20%. So both the federal and the province will charge a rate, the applicable tax rate, based on your taxable income amount on your taxable income. If your taxable income is less than this, if it's greater than this and is less than this is the rate that will be applied. So for example, if your taxable income is 70K, the first 5197 will be at 15%, then the remaining amount, that is 70K minus 5197, let's assume that's 20K, the remaining 20K will be charged at 21%. So that's why it's called marginal tax rate system. Marginal tax rate system. So, and both the federal and the province will charge this amount. For example, if your taxable income is 70K, Ontario government will charge 9.2% on the marginal amount here. Federal will charge 21%. Then on the first 5197, the province will charge 5.1%. And the federal will charge 15%. So that's how the rate is applied on your taxable income to get your federal tax payable. Then from your federal tax payable, we now have, so they add the federal tax payable to the provincial tax payable to get the total tax payable. Then we now have the tax credit that will reduce your tax payable. The essence of the credit is to reduce how much tax you should pay. So we have federal non-refundable tax credit. I'm going to explain what each of those tax credit means, the provisional tax credit, then also minus the refundable tax credit to get your net tax payable. Now, this net tax payable will now be compared with what you have paid at source. So, as Ella said, it's a reconciliation of the tax you have paid versus what you should have paid. Now, it's more of a calculation. And I tell people that if you give the same information to the same tax preparer, they should get the same amount, either balance owing or refund, except maybe one of them is doing the wrong thing. One of them is doing the wrong thing. So it's a calculation. As long as the person understands your tax situations and is able to apply the right tax rate on your taxes. Now, as earlier said, is a calculation. Okay, I can take this down. This is the component, the salary income component. Can you still hear me? Hello?
Yes, we can.
Yes, we can.
Yes, we
Okay.
can.
So
Yes, we
this
can.
is the personal income tax component. This goes into the personal income tax. And these are all the different types of income tax that are applicable, Yeah, I should be able to maximize this, that are applicable. So the first is the employment income, your salary income. Either you're a full-time or a contract staff, as long as you have a T4, then that is reported, is part of the income component. If you have commission paid, you have other employment income, you have a side business as a sole proprietor or other income sources, it will be reported as part of your personal income tax. Pension income, disability benefits in terms of benefit from the government. If the individual receive benefit from the government in terms of disability, that will be part of the income that is taxed. There's nothing that is free in Canada. If you lose your job, the government is paying you EI, either you are taking care of, you have a new baby, or you lose your job, and the government is paying you benefits for not having a job. That income is also what? Taxable. Then if you have investments, maybe you have stocks, shares, bonds, and other type of investment, the interest you earn on such is also taxable. Rental income, if you have Airbnb or you have a property that you own, or you even have your own personal property and you're renting it out, maybe you are renting one room or two rooms to other tenants, that income is taxable. Capital gain, if you sell a property, you sell your car or you sell your home, and the capital gain on that is taxable. One of the slides explain how capital gain is being calculated. Then support payment received for people that have maybe there's a disagreement between the couple, they're divorced, and your spouse give you money to take care of the kids, that income is also what? Taxable. And for those that are retired and you are earning income on your RSP, registered retirement savings, that income is what? Taxable. If you are earning income from your first home savings account, the income you are being paid, that income is taxable. Now, first home savings account, the income you earn is taxable. The only income that is not taxable within this bracket is what they call tax-free savings accounts. So we also have what they call tax-free savings account. That's why it's called tax-free. It means that the income you earn is tax-free. So if you have free money, the first account you should use for such is your tax-free savings account, except you want to save for your first home, and that's the essence of having such account. First home savings account, then other income. Now, moving to business income. Now, if you have a business that is not registered, the expectation is that the income you earn from such business, you should report it. Let's assume you sell online. You do drop shipping, or you earn commission on investment, you trade online. The income you earn is taxable, and you are supposed to report such income. Now, for registered business, of course, any business that's registered that is a sole proprietor, that is not an incorporated business, should be added to your personal, because from the legal implication, such business is not a separate entity, so it's the same person and should be added to your personal income tax. Then we have professional income. If you have a business, like maybe you have a lawyer who is not incorporated, the income should come here. Income from commission, from any commission you earn. Farming income, if you have a farm. Then workers' compensation benefit. So we have people that have maybe injury or incident at work and they're not being able to work for some hours. The government will compensate them through the employer. That's workers' compensation benefit. That income also is taxable. Social assistance payment, maybe for people that maybe lose their job or something happened to them and the government is supporting you, that income is reported and should be taxable. So these are all the components that falls under the personal income tax. Now moving to the next slide. Tax deductions. Now, these are what is being used to reduce your salary income. As Ella said, the key driver of our taxes is taxable income. So the major goal is, how do I reduce my taxable income? Using other deductions. So our advice is just look out to see which one applies to you so that you ensure you send all the right documents to your tax preparer. Now, because some tax preparers are not properly trained, they just want to garbage in, garbage out, whatever you send to them. They won't even ask additional information or ask for additional information from you looking at your tax situations. So you want to ensure that you have information on all the available credit to you so that you can send all the documents to your tax preparer. Now, these are tax deductions that reduce your total income. If you have pension adjustments, registered pension, RPP or RSP, most of us, maybe through your employer, you might have some retirement savings through your employer and it's on your T4, while you have some private RSP, you need to ensure you send this to your tax preparer. Then first home savings account. The government want to encourage people to save towards their first home. That is why it's applicable here to reduce your taxable income. Then if you have full RSP, it's applicable. Annual union dues, professional dues. For some of us that you need to pay professional dues, like I pay CPA professional dues annually. So I use this to reduce my taxable income. There are some profession, your employer will take it directly from your pay, from your periodic pay, and it will be on your T4. So that will be captured directly on the T4. Childcare expenses. Now, for those that have maybe kids in childcare, this is applicable. If you put your child in childcare, you pay either monthly childcare expenses. You need to claim this. Now, childcare expenses is only applicable. Now, government is encouraging people to work. So if you are not working, if one of the spouses is not working or one of the spouses is not attending school full time, or maybe nothing happened to any of the spouses during the course of the year, and you're not working, then government will, and it's only the lower earning spouse that can claim this. Number one, you need to take the lower earning spouse. The whole essence is to ensure people to work. Not that you're not working and you can put your child in daycare, you won't be able to claim this daycare, childcare expense. Also, apart from daycare expenses, during summer, if you maybe have your child to attend any summer camp, you can claim this. You can claim this. Also, some private school, also, you can claim some of the tuition fee you pay for your kids in private school. But on the document, it will show which amount is allowable for childcare deduction. Then disability support deduction, maybe for some people that have their child has some form of disability, autism, and the rest, and such must have been approved by CRA. You can use that to reduce your taxes. Then business investment loss. So government is encouraging that if you have a business and it has a loss, then you can use such loss to reduce your taxable income. Moving expenses. Now, this is applicable to students and workers. If you move because you need to, let's assume you have a student in Kitchener, then you need to relocate to BC because maybe you are going for a master program. Then you are relocating and the distance of travel is more than 40 kilometers. Now, not that you're coming directly from Nigeria, no, you can't claim this. You can only claim this after becoming a resident of Canada, maybe after spending, maybe you are a student of Conestoga and you need to relocate for another program in another province. Yeah, you can claim this. Or for someone that is working, let's assume I get a new job in BC, yeah, I need to move and the distance involved is more than 40 kilometers, then I can claim moving expenses in terms of moving. Maybe I need to use airline or air travels, or I need to rent you all to move my family. I need to stay in the hotel for some days before getting accommodation. These are moving expenses. Now, support payments made for people that have maybe challenge with their marriage and the spouse needs to pay maybe the wife or the husband to support the family while they having challenge with their marriage, then you can use that to reduce, if you're paying, you can use that to reduce your taxable income. If you are receiving, you have to include that in your income because that income will be taxable. Now, carrying charges for people that have investments. Let's assume I borrow to invest in stocks or in shares. And yeah, government is encouraging us to invest. Then the charges, the interest on such loans, and I can use such to reduce my taxable income. Then CPP is Canada Pension Plan. This is standard default from your employer. The employer is required to take CPP. QPP is for Quebec. So would be used to reduce your taxable income. Then other employment expenses. This is only applicable for people that work from home and they're able to get from T22 to 220 to 200 T2200 declaration of maybe work from home expenses. If you need to claim that, you need to get that form completed by your employer. Then people that are religious employees, other deductions. So these are all the list of tax deductions that we can use to reduce your total income to get your net income. And as I said earlier, your taxable income is key. So the goal is, how do I reduce my taxable income with any of these applicable deductions? Now, moving to the tax credits. After your taxable income, your tax payable will be computed based on where your taxable income falls. As Ella said, depends on, let's assume your taxable income falls into the 70,000 range, then this rate will be applicable. The first 5197 will be charged at 15% by the federal, the province will charge you at 5.1%, while the remaining maybe 20K, assuming the remaining 20K, 21% by the federal, and the province will charge 9.25% to determine your tax payable. Now, after arriving at your tax payable, we need tax credit to reduce how much we should pay to reduce our tax payable. Now, we'll be looking at the components of the tax credit, refundable and non-refundable. Now, the difference between the two is this is non-refundable. From the word is not refunded. The implication of such is that we can use it to reduce our tax payable, the amount you are required to pay on your taxable income, but it cannot reduce it lower than zero. A common example is our tuition credit, the credit you earn or you get for paying school fees, is a non-refundable. It means that it can only reduce your taxes to below zero. But if you don't have enough tax payable to pay, then you need to carry it forward to next tax year. So you can't use it to increase your refund. It can reduce your tax payable, but it can't reduce it below zero. That is why a lot of students have to carry forward their tuition credit. As Ella said, when we file our income tax, is a reconciliation of the tax you should have paid versus what you have paid. So even if you're a student and you did not earn any income in 2024, no income tax was deducted from your salary income because you don't earn income. You can't get any refund. The best case scenario is your tuition credit will be carried forward. So because we are comparing what you have paid, if you have paid zero, then zero versus, even if you have tuition credit that could increase your taxes, zero versus maybe $1,000, the lower is zero. So the best case scenario is that will be carried forward. So it's a reconciliation of what you have paid versus what you should have paid. Now, these are the list of the non-refundable tax credit. Please watch out so that you can see what is applicable to you. Basic personal amount is for everyone that is filing income tax. But this is prorated based on the number of months you spent or you resided in Canada. For someone that came in April 2024, you won't get the full amount of this credit versus someone that resided in Canada from the beginning of the year to the end of the year. Yes, spouse or common law. Now, for people that are married or in common law relationship, you get a credit for being married just to support the family. Now, I usually get a lot of questions around this. That is why people recommend that some people should file separately if you're married or you're in a common law relationship. Ideally, if your tax preparer and you're providing the correct information to your tax preparer, someone that is married or in a common law relationship gets more credit, should be in a better position than someone that is single, except wrong data or you're manipulating the figures. That's one. Now, for people that are married, it's advisable to file together because the tax software needs your net income figures. And if you file before your spouse will just, the first person that file separately will be using an estimate. And the other partner might be claiming some other benefit that will reduce his tax income. So if you are filing separately, sorry for that. If you are filing separately, there's likelihood that you will have the wrong information in your taxes. So it's advisable if you are married or in common law relationship, please file together because as you are inputting the credit into the tax software, your net income is changing and the system needs to pick the final net income before it transmits your return. So it's always advisable to file together if you are married or in common law relationship. People that volunteer, firefighter, they get tax credit. Everyone that work in Canada also get Canada employment amount, home buyers amount. Now, for first-time home buyers, there's an amount you get for example, the amount is $10,000. That is the amount of the credit. But the monetary value of the credit is 15%. So 15% of $10,000 is $1,500. So it's going to impact your tax payable by $1,500. But the value of the credit is $10,000. But the monetary value of that tax credit is 15% of all these tax credits, 15% of it. Home accessibility expenses, maybe for those that are disabled and they need to renovate their homes to make it more accessible. Adoption expenses for people that adopt kids from other countries or the less privileged within the country. Yeah, you can claim this credit. Digital news subscription. If you subscribe to Bloomberg, maybe for your business or for personal use, yes, you can claim this as long as it's digital. Government is trying to encourage people to move from paper subscription to digital subscriptions. Pension income for people that are collecting pension, disability amount for self, people that are claiming disability tax credit, and for their transfer from their dependent. If you have any of maybe your kids that is disabled and are claiming such, so that can be transferred from the kids to the parent to reduce the parent taxable income. Then interest paid on student loan for those that take up loan to maybe for their PhD, their master's, or any program, you can claim the interest you paid. You should get a tax slip for this before you can claim it. But then this is where most of the students, Conestoga students and the likes, your tuition credit is applicable. As Ella said, if you don't earn any income in 2024 and you not pay any income at source, the best case scenario is such tuition credit will be carried forward. Then you can transfer tuition credit if you don't earn enough income and you don't have enough tax space at source. Such can be transferred to your spouse to reduce your spouse taxable income. The medical expenses, this is pegged to 3% of your net income. So for people that are earning huge amount of salary, maybe if your taxable net income is like 70K, it might not impact your taxes because 3% of 70K, I think that's around, is it 2,100? And if your medical expenses is not up to 2,100 in 2024, it will not impact your taxes. So for example, if my net income is 70K for 2024, the family net income in this case, and the total medical expense for the family is just less than $1,000, it's not going to make any impact on my taxes because the 3% of my net income is more than that. So the whole essence is to support families that are not earning, that has lower net income. Then donations. If you donated to religious organizations, your churches, your mosque, your non-for-profits, you can claim such to reduce your taxes. Then federal foreign tax credits. Yeah, this is also a tax credit. Now, for those that their spouse, or for those that are earning income in Nigeria and they need to file their tax, you need to include this in your taxes. Now, what the government is trying to do is, government is trying to put you at par. If you earn this income, let's assume in Nigeria, you're earning 50 million naira annually. If you earn this 50 million naira in Canada, what is the applicable tax rate? Just to try to relate it to those people earning such income in Canada. So they will compare the income tax you pay on the 50 million in Nigeria versus the income tax you should have paid if you earn that 50 million naira in Canada. Now, if you overpay tax in Nigeria, you'll get a refund. But if you underpay compared to your peers in Canada, you need to pay the differential in Canada. Just trying to compare you with peers in Canada based on your taxable income. So these are the list of all the tax deductions. These are the list of all the tax deductions. No, I mean non-refundable tax credit. Now moving to the refundable tax credit. From the word refundable, it means that it can reduce your taxes to zero, and even it can increase your taxes. Instead of reducing to zero, it can even increase the amount of refund you will get. That's why it's called refundable tax credit. And these are the list of the refundable tax credits. Maybe if you overpay CPP, this happens if your employer takes SSPPP, CPP, or you work in maybe more than one places. There's likelihood that you overpay CPP and the overpaid amount will be added to your refund. If you overpay EI also, refundable medical expense supplements for those that they have maybe disabled kids, they get this supplement. Canada workers benefits. I'm going to talk more on that. Canada training credit. Government is trying to encourage people. Everyone have like $250 annually to get yourself trained. Go for attend a training course, then you get maybe $250 annually, and it's refunded. This multi-generational home renovation, this is applicable. Let's assume the whole essence is they want people to refurbish their homes, make it available for other people to live or cohabit with you. So let's assume I have a new home, the basement is unfinished, and maybe I have my parents, they also live in Ontario, and instead of them renting, I can finish my basement, and let's assume I finish my basement with $40,000. I can use that to reduce my tax credit. It's a credit I will get because trying to cohabit with my parents. That's why they call multi-generational. Children and grandchildren, grandparents, living in the same home, but you are repairing the home to make it available for your grandparents to live. And you can get some tax credit for that. Employee and partner GST, eligible educator school supply. Now, for those that are teachers, if you buy supplies for kids in your school and the school did not refund you, you can claim such on your taxes, then return of fuel charges. Now, I see a lot of new immigrants claiming this Canada workers benefit, and some of the tax softwares are not properly structured to check to ensure that you are eligible. That's why I included. Is a refundable tax credit. Some people can get up to $1,200 in a year. It depends on. Now, the whole essence of Canada workers benefit is to support people that are not earning so much. The family income is low, but you are only eligible for this if you and your spouse were enrolled. You are not eligible if you and your spouse are enrolled in a full-time course for at least 13 weeks in a year. You and your spouse were enrolled as a full-time student in a school for more than 13 weeks in a year. You do not reside in Canada throughout 2024. So for those people that maybe you arrive Canada in 2024 in the middle of the year, you're not entitled to this benefit, or your spouse is not residing with you in Canada, you're not entitled to this benefit, except you have what they call eligible dependent. Eligible dependent is someone that's under 19. Let's assume you are only living with your child and your spouse is not, you are divorced, your spouse is not with you. That is an eligible dependent. Now, moving on to the changes in 2024. So this is just the key changes in 2024 to tax laws in 2024. The first is short-term rental. Now, the summary of this is, if you are having, you have a rental property and you're doing Airbnb, either separately from where you're living or where you are living, you are renting one room to the other, government wants you to declare such income, because most likely your tenants living in one of those rooms will want to claim premium benefits, and it's going to include your name that you collected this money from him. So please declare such income. That's one. Now, government is saying for you to reduce the amount of taxable income you will pay, tax payable on your taxes, your Airbnb must be compliant. If it's not compliant, so this is a scenario of Airbnb that is not compliant, you earn 60K in a year, and you have rental expenses to reduce it. So 60 minus 40 is 20K. So you only be taxed on it 20%, assuming 20% effective tax rate. 20% on this is 4,000. But if your rental, your Airbnb is not compliant, then you can't claim this 40K to reduce your taxes. Even the mortgage interest you pay on such property, you can't claim it because your rental is not compliant. If you want to know if your rental is compliant, you need to confirm from your city. You need to talk to them and you need to confirm that it's compliant. If your rental is not compliant and you claim it, you misled your tax preparer, CRA can come back and reassess you. Then the next is on capital gain. Now, as Ella said, capital gain is sales price minus cost minus selling expenses. So let's assume you sell your rental property or you sell your property at 60K. The value at 600K, let's assume at 800K, and this is the cost of the property, 400K. Then the cost of selling it, maybe you pay rental charges and other charges, 20K. So this is the capital gain on this. The selling price minus the cost minus selling expenses. This is the capital gain. Now, it now depends on what is applicable. If you sell your property within less than 1 year of acquiring that property, government assume you're a flipper and they want to discourage flipping. So they're going to charge you 100% on that. 100% on this, 100% on this, 100% on the capital gain. 20% of this will be at $76,000. So you're going to pay a tax of $76,000 on this 380K capital gain. 380K capital gain. If you're a flipper, that is if you sell your property less than 12 months after acquisition. Now, there's a new rule. Even though you owe the property more than 12 months, government is trying to target people, the higher income earners. The expectation that if the value of the capital gain is more than 250K, then instead of charging you the standard 50%, before 2024, 50% of the capital gain is taxed. 50% of capital gain is taxed. But now, if your capital gain is more than 250K, the capital gain on the property is more than 50K, they will charge 67%. Just to, government is saying they want to penalize people that are earning so much. The expectation is that if your capital gain is more than 250K, it means that you are in the higher income bracket, the people that have property of higher value. That's the expectation of the property. But of course, there have been this debate around this. There's likelihood that someone that has just one single home selling it and is not his primary residence, the capital gain could be up to 250K and they will penalize that 67% of the capital gain. Now, flipping, even if it's your primary property, your only property, and you sell it less than 12 months, this flipping rule will apply. But if it's your primary residence, your only property, and you sell it maybe after 24 months, is not taxable. Even 50% of the gain is not taxable. It's tax-free because it's your primary residence, your only property, and is being disposed after 12 months. Moving to the next slide. Now, this is targeted at people selling online. Government wants people that trade online to pay their share of taxes. So government is after this caliber of people. If you have a business, you're selling online, you're earning commission online, government is after you, because the likes of PayPal, eBay, and the likes, they are mandated to inform the government when you do transactions that are above $2,800 in a single year. 2,800, or the transactions is more than 30, they are compelled to report your social insurance number and your transaction and your details to the government. So government is expecting you to remit such. If you don't remit, government will come after you because they have your details. Now, I tell people, if you're in this part of the world, the best way to reduce your taxes is you need to start a business. You need to start asking yourself, what can I do to reduce my taxes? And one of the vehicles is to use a business. Like for me, I do my work remotely. I have clients in BC, in other provinces. Now, let's assume in a year, maybe on my mortgage, maybe I pay $30,000 in a year on my mortgage. Now, as a business owner, using my home for business, I can use maybe 20% of that 30K to reduce the taxes I will pay on my business income, my business taxable income. So if you don't have a business, you need to start thinking, what can you do to reduce your taxes? Someone that has a business can use the business income to save for retirement savings, for the directors, for the owners. You can pay, if you have teenagers, like you can pay them to help you support what you are doing. Like if I need more hands, I can engage my daughter, who is a teenager or preteen, to help me with some Excel work. And I can pay her. And that would be used to reduce my taxes because it's an expense and my daughter is earning. Other employment expenses earlier discussed, if you work from home, you need to get the required form completed by and that will be used to reduce your taxable income. Business use of home expenses, my electricity bill, telephone bill, repairs of the home. All those portion of it can be allocated to the business to reduce my business taxable income. Insurance of home, vehicle expenses, family vehicle, I use part of it for business, to meet clients. I can use such expenses to reduce my taxes. So please, I will encourage you to start thinking, what business can I do to reduce my taxes? Now, these are the filing deadline. For personal income, April 30, 2025. Now, for those that are sole proprietor or independent contractor, this is their deadline. Maybe 1 month and 15 days. But I always advise people, because as a sole proprietor, if you owe the government after filing your taxes and you not determine that you are owing, government will charge you interest. So let's assume I file my tax on this day, I'm the sole proprietor. After filing, maybe I'm owing $1,000. Government will now charge me interest on that $1,000 between June 15 and April 30. It's like as if government gave you overdraft between these 2 days, and they will charge you based on the number of days between the date you file and the date, this April 30th. They will charge you interest on it. So it's always recommended that even though you're a sole proprietor or independent contractor, file your taxes before the April 30th deadline. A sole proprietor or business that is not registered, you need to include the income in your personal income tax. For partnership, maybe you have a law firm, accounting firm, and you set up the business as a partnership. Also, you need to include the income and expenses in your personal income. If your business is incorporated, a corporate business is a separate legal entity, you need to file a separate income tax because it's a corporate. Now, these are popular tax myths, like things that are not true that I need to clarify, especially for those, this is your first time filing. I can claim my tax, your rental, part of your rent as a credit. Of course, you're not getting 100% back. You are getting part of it, maybe 15% or 10%. Now, it's only applicable to Ontario or BC. So, like someone in Alberta or Alberta cannot claim such rentals credit. Gas expenses, some people are keeping their gas record. You can't claim it except you have a business, and you can use it to reduce your business taxes. Groceries, you can't use this to reduce your taxes except you have a cooking business and use part of the groceries you purchase for your home to cook for client. Then you can use portion use to cook for client to reduce your taxes. Student get refund. As Ella said, if you did not work in 2020, a student can even owe the government based on your tax situations. Your tax situation depends on the income tax you have paid at source. If your employer is deducting the right income tax, if your employer deducted a lower taxes, most likely you could owe the government because they did not deduct the right percentage of tax. I earn less than 10,000, you don't need to file. Everyone needs to file your income tax. Tips are not considered. Yeah, of course, tips. You pay income tax on tips. So you need to declare all the tips you earn. I work abroad, I don't need to file a tax. For those that are spouse abroad, it depends on if your spouse is not a resident, you still need their income to determine the family income. But for those that you are PR, permanent resident, maybe in the next 3 years you want to file for citizenship, government needs record of your taxes for the last 3 years. So you need to ensure, even if your spouse is not resident, you want to encourage them to file. And that's when the foreign tax credits will be applicable. They will need to get a document from maybe Lagos State government or Rivers State government, wherever state they live, that shows the income they earned for the year, the tax that was charged on such income. Tax filing is not voluntary. Students, you need to file your tax so that you can carry forward your tuition credits, even though you're not earning any income. You need to file so that you can, CRA record can have the tuition you paid in the various years and they can be carried forward. Mortgage interest is a tax deduction. It's only applicable if you have a business to reduce your business taxable income. Money made online is taxable. You need to report it. If you're out of job or you're on maternity leave, you're collecting employment insurance, you need to report such income. There's nothing that is free in Canada. Yeah, that is the end of the presentation. As Ella said by the moderator, I'm the founder of Accurate Consult, and this is what we do. If you have a corporate business, we can help you file your income tax, of course, personal income tax, your good service tax or HST tax filing. If you need to register a business and ensure that it's properly structured from the onset, we can guide you to do that. If you have a business and you want to get a T4, you want to pay your staff, you want to get a pay stub, we have a system that we can use to set you up. If you want to start a business, you want to consult, you want to do industry research, we can help with that. Then if you want a financial statement, profit and loss, balance sheet preparation, cash flow statement, we can help you to that. So that is the end of the presentation. Over to you, Ugo.
Thank you very, very much. Thank you very much. I don't know if you can see me. I've been moving things around, so I can't see. I'm not sure what I'm seeing. But thank you very much. This was very detailed and very in-depth. And people had lots of questions. I mean, I have to say, this is a record. We have 72 people online. And I think this is just a testament to how important this subject is. So thank you very much. Before we go to the questions, and there are lots of questions in the chat the comment section, I want to recognize the presence of Uche Okugo. I saw him come in. while the presentation was going on. So, Uche, thank you very much for coming in. We'll give you some time because we need to hear some remarks from you before we end the event. So, share maybe okay, maybe leave your slides online on the screen in case you need to refer to it in answering questions. Yes?
What did you say?
Yeah, Ogo.
Yeah, I was talking to Share. Maybe just I was gonna say maybe stop sharing, but I was saying I just think maybe leave it on in case you need to refer to a particular page when you're responding to the questions.
Okay.
Okay. Hi, Uche.
Hi. Good afternoon, everyone.
Welcome.
Thank you
Yes,
so much.
thank you. So there were quite a few questions. Some of them are straightforward and some of them you need to dig deep. So somebody said if their spouse is not in the country, do they need to declare his income? And I think you answered that question.
Yeah.
Okay.
Yeah, because they need to calculate your family income, even though your spouse is not in the country. You need the annual income of your spouse. Yeah, that information. Even though your
Absolutely.
spouse will not file an income tax, most of the time, the spouse will not file, but the person resident in Canada need that information to file his or her income tax.
Okay. So do they just say this is how much my wife or my husband was earning? Do they need to bring the evidence of filing in Anambra State or in Abuja or where? Or they just say my husband was earning X amount in Nigeria?
Yeah, so it's two different scenarios. If your spouse is not filing, so there's just like an attachment to your income tax. Your spouse is not filing his or own income tax. What they just need is the annual income amount. Maybe in Naira, then the tax preparer will convert it to Canadian dollars using the standard. So there's some standard exchange rate that CAR will advise tax preparers to use. Because when they come for audit, they want to ensure that you use that standard exchange rate. So for such, if you're not filing for your spouse, you just need the annual income amount in Naira. But if both couple are filing, maybe you want to file maybe for the spouse is a PR and you need that information because you need to file for your spouse also, then you will need to get the required documents either from Lagos State Internal Revenue or Rivers State Internal Revenue that will show this is the annual income and the tax amount payable. Because when CRA comes for audit, they will ask for that information. So for me, if I'm filing for you because it involves foreign tax credit, I need that information because they will ask for it. So it's better for me to have a copy, look at it, and use that information to file the income tax.
Thanks very much. Someone's asking, was the T2125 be filled if someone had a second job where they were only earning a commission as income? Like, you know, those jobs where they don't pay a salary, but you earn commissions on sales.
Yeah. Yeah, so ideally, the employer should give you such. Is a tax slip the employer should give you, and that should also be available on your CRA profile if you have been filing, if this is not your first time of filing.
Okay. Now,
sorry, I was the one that asked the question.
Yes.
I don't know if I explained it well. So the scenario is this. I have a second job. I don't even know if it's a commission income, but I get a T4A. And then while filing, it asked me, what T2125 do you want to put this on? So I'm not so sure if it's a commission income. I don't know if it's a business income. I don't know. And it was asking me, is this a partnership? I don't know. But the
Yes.
T4A just as the income amount.
Yeah, so what's the name of the tax slip is T4A.
Yes.
Now, what type of income is that?
There was no income, there was no tax, nothing.
So the question is, the employer, what type of income did you earn from that employer?
I don't know. So I put it under a commission income, but it's not commission from sales. Like they don't give you commission from sales. We actually don't have commission from sales. It's just what you are paid based on the hours you work.
And they gave you a T4A.
Yes.
And it's not a not-profit.
No. It's all these US companies that hire somebody here in Canada, just do the job. It's customer service, basically.
Oh, okay. Yeah, and I guess you're trying to file your tax yourself.
Yes.
And then you need to talk to the support of the software so they will guide you on what you need to do.
That's the thing, they don't guide. So when you ask, they say, oh, we are not professionals. You need to meet a professional. But it's a T4A, that I'm sure. But when using Wealth Simple, it will ask you, which of the T2125 do you want to put this on? And then it gives you a breakdown of like business out of home activities or expenses and stuff like that.
Yeah, so it should be one of the income, most likely a business income. Because T4A, technically, you are earning commission for them giving you a T4A. I don't know why they gave you a T4A, and it falls within one of the applicable business income.
Okay. Thank you. Then I'll try with a business income because the commission income is ridiculous. But yeah, thank you so much.
Yeah.
Yeah.
Thanks, Chioma, for that question. Now, somebody has a tricky question here. It says they paid tuition for, they were going to study in Canada in 2022. They paid tuition and they did the first part of it online. So in 2022, they were online. And then they didn't get they weren't given a visa they didn't get their study visa. They were not given a study visa. And this part, level 2 of that course needed to be in person. So they deferred it because they didn't get a visa. In 2023, the person was now given a visa and the person now came to Canada in 2023 and now did their level 2. And the question is, how can they claim tuition tax refund for 2022 since they were not residents and they only got their SIN in 2023? They only became residents in 2023. But the fees were paid in 2022.
Yeah, so you need to get across to the school. The school should give you a form. The school should give you the standard T22 also. Now, if that is not available, because there is no saying, and the school should be able to give you a document shows that it is fees.
Sorry, Shaya, is everybody hearing Shaya properly? It's breaking a little.
Yeah, it's breaking.
It's
Yeah, it's
breaking.
breaking up. Yeah.
Are you using MTN?
It's breaking badly.
Okay.
No, it's still breaking.
We're hearing you, but it's breaking badly.
Okay. Possibly. Okay. I'm trying 100% here. So sit down.
Okay.
Sit down. No.
Share, you are muffled. Maybe log out and log back in or something.
Yeah, maybe. Yeah, if you can log out and then log back in.
Okay.
So it will be interesting to see the response to this question because I had a similar situation. I paid my school fees in 2021 and didn't come in until the following year. I deferred by a year and I came in 2022, but you will still get your form from the school and then you can still use that for your filing. So Shaya will shed more technical light on it, but I know that it wasn't a problem, even though I had paid 2 years prior and didn't come in until a year later. Well, one thing I would say is no matter how little your income is, it will be taxed. In my the first tax filing I did, I had only been in Canada for 4 months and I wasn't working. So the only income I had was the $50 interest on my savings account and they taxed it. So they will collect their share. So I earned $50 interest on the money in the account and they took their very merry share out of it, even though, I was sweating that I didn't have any money. So please keep your questions coming in. Shaya is going to come in a minute. While we're waiting for him, Uche, are you able to say hello?
Yes, I am. Good afternoon, everyone.
Good
I'll just be brief.
afternoon.
And firstly, apology for joining in late. I had told Fidelia that I had like an event where I'm actually the MC/moderator for, and it was a day-long event. It ran till 4:30 p.m. So thank you very much. This is quite a number of persons online. And I listened to Shay's presentation. It was just phenomenal. The examples he gave, the way he broke down all the details, and telling you what falls under each category of what is tax deductible and all that stuff. So it was really, really a learning curve as well. And I'm pretty sure that for those that are filing taxes for the first time, especially, they would have learned a lot. One thing I would say quickly is for business owners, especially, African business owners. Let's not run our businesses with the intent to file taxes and get as much money back as possible. And then in that process, we unconsciously keep our businesses small. So most people run their businesses and mix business expense with personal expenses, all with the whole idea of, so that when I file my taxes, I'll get a lot of money back. What that unconsciously does is it keeps your business small time for a long time. And it's a deliberate action by you, but it's unconscious into the future, because someday in the future, and this could be 3, 5, 10 years later, you may want something big from an investor. Could be government, could be somebody in the private sector. But your books will not show you running a progressive business. And the one thing that sets everyone off is you wanting something big when you have been small time for a long time. It just wouldn't work. So if our business is growing, allow it grow. File the taxes, show that you're making money. Don't be scared to file taxes on 500K, 1 million. No, don't try to force it to be, 100K or 80K or 47,000. Just file it. These things have a way of, coming up big time for you in future. So that's really what I wanted to focus on, because some persons will say, okay, how do I start a business and, file taxes to get tax benefit? The next thing you know, you're keeping a very good business small time, which shouldn't be. And it's part of the problems we're having in the African community as well, where our businesses looks like they're not growing, where you can employ 5 people, you're keeping it to 1 employee just because you want to keep, filing taxes and making money from the whole process. I don't know. So I thought I should just mention that, because it's been in my mind to share, each time I'm in this tax learning process with people on webinar. So once again, thank you very much. NIROW and NNC have a very successful relationship, and I'm happy that we're keeping that going. Thank you.
Thank you. That was a very, very important point. I learned that point back home in Nigeria, where people try to understate their income to keep the taxes low. And then when you now go to the bank, you got one big project, or you need to win a certain kind of project. And they say companies that have income of this threshold, and you made that threshold, but you were understating for tax purposes. And because of that, you don't qualify for the big opportunities. So yeah, that's very important. And I just want to add this too. When people pay you or you're charging people, let them pay to the company account. Don't say, well, if you want to pay, keep it soft. You can give me cash and then you won't pay HST. Or if you want to pay into my company account by e-transfer, then you will pay HST. And the person say, oh, no, let me pay cash. Let your company grow and let the growth show. I saw Shaya come in. Aisha, is he really in? I saw him come in
Yes,
and
he's
admitted.
Yeah, he's in. And he's
Okay,
on mute.
Shaya,
Can you hear me?
good. Yes, we
Yes,
can hear you. The floor is yours. I'm gonna try to compress some of the questions or just read them out. And maybe the ones that sound like they're the same. I can't do that. That's when I say I can't do the merging, because I may think they're similar and they're not from a technical perspective. So here's this person who paid who paid school fees in 1 year, but they were doing online. Then they deferred the second part of the course because they didn't get a visa, now came in and they got the visa later, came in 2023 and completed the program. They were asking how they can claim the tuition tax refund for 2022 since they were not in the country, but they paid the fees in 2022.
It's tricky because even at that 2022, the person was not a resident of Canada.
Yes,
So let's
they were
assume
not.
that you're not a resident and you pay such credits, substitution. Yeah, it's tricky, but of course, you try, and the worst case scenario is they will reject you. So as long as you can get a document from the school that you pay this, yeah, your tax preparer or yourself can put it in. The worst case scenario is they will reject it and you move on. But I think you can give it a try, put in the
Okay,
credit, see what Sarah will say.
excellent. So should RESP contributions be reported in your tax filing? How should it be reported? Yes, RESP. Should RESP
No.
contributions made to your children's account be disclosed or reported?
Education savings plan is not reported, does not attract any tax credit.
Yeah, and that's because you're paying it with money that's already been taxed. Because it's your income after tax. Then use
Yeah,
it
government. Yeah, I agree with you, but government also is not trying to encourage, even though they're trying to encourage it, but it does not have any tax credit benefits.
Okay. It's CWB for couples only. That's the Canada Workers Benefits. Is it for couples only?
Individuals too are eligible.
Okay. Then there's somebody who owns a YouTube channel and he only provided his SIN for the AdSense account. I guess that's the account where the YouTube pays their money. Because the person said they don't have a GST or HST registration number. How do they remit tax for income earned from a YouTube channel?
So such income is more of like, even if you don't have a registered business, it's like other income. So you don't need a GST to report income. Your GST filing is done if you collect GST and you're registered for GST. So because you're registered for GST, you need to file your GST. But income you earn from YouTube or other sources to be part of other income when you file your personal income tax. Is the income amount you are adding, not the GST component. So you need to add that to your personal income for your personal income tax. Yeah.
Great. Can you explain Schedule 12 multi-generational?
Okay, so government just trying to encourage because we have scarcity of rental property. Government is trying to encourage people to cohabit with their seniors. So let's assume my parents or my grandparents is alive and lives in Ontario. She's looking for accommodation, and I have a basement that is not finished. So I can finish the basement as long as it has a separate entrance, then it is livable. It has its own washroom, kitchen, and the rest. Now my grandparents will live there. Now on my own taxes, I can claim. Let's assume I finished with $40,000. I can claim that $40,000 as a credit. Now, of course, they're not. The refund is not 40,000. The impact on my return will be like, 15% of that 40K was a credit that you can claim.
Excellent. So someone is asking at what point a student can file for child benefits. Then a rider, they said, I filed separately last year, but provided their spouse's information and his income in Nigeria. What is the best way to do this, to file now? And will it be filed separately or under her income? As if she's doing that again, filing her spouse's information. So two questions. One is about child benefits. When is the best time at what point they can file for child benefits? And then the second question is about the spouse's information and income. What is the best way to file that and if it will be filed separately?
So the best way is to call CRA. Now we're in the tax season. When you file your income tax, CRA extracts information required to process the child benefit when you file your income tax. But out of the tax filing season, you can call CRA. CRA will determine your eligibility. I know they are changing the rules, but as at the last time, the person must have resided in Canada maybe for 18 months. So before you are eligible for such, but you can call CRA, but when you file your income tax, the information is available for CRA to extract, even though you're not yet eligible. But whenever you're eligible, they'll be able to extract the information from your personal income tax.
Okay, great. Should one declare business income even if the business is not registered? And I think you've answered that earlier. Yes.
Yes.
Okay. Somebody said they did a paid working interview. They were paid, and but the tax was not deducted. Are they supposed to pay that tax from the money by themselves? And are they supposed to file the tax by themselves? Do they need to open a company to be able to do that?
Excuse me, I'm having issue with my power. The power of my laptop, I need to fix it so that it does not
Okay.
go. Sorry. It's yeah, it's charged. I don't know why.
Okay, we have only a few minutes left, so I'll just ask
Okay.
that we maybe we'll make the slides available to people. We'll answer as many questions as we can, but we're being mindful of the fact that we're supposed to end at 5:30 and it's
Okay.
5:26.
Okay.
Okay. Are we good?
Yeah.
Excellent. So it did a paid working interview, and they're wondering how did they file the tax since the tax wasn't deducted at source? How did they pay this tax?
So the person was paid for attending an interview.
Yes, they worked for 11 and a half hours, paid at $30 an hour. They were paid for the interview. How did they
Yeah, so
declare this?
it should be part of other income. So when you
Other
file,
income.
it will be part of it that relates to other income.
Okay. Does the T4PS tax slip fall under taxable income or tax reduction? T4PS tax slip.
That's profit sharing.
Mm-hmm.
Profit sharing is an income.
Okay.
There is an income. It's one of the tax slips that relates to income. Yeah.
Okay. Then somebody's asking if you could clarify on Canada training under the refundable income.
Yeah. So if you attend any training, professional training in 2024, then you need to include it. First, the allowable credit is $250 per year. But for someone that's not claimed in prior years, maybe I did not claim in 2023, it will be carried forward to 2024. 2024 allowance is $250. So 2023, 2024, cumulatively, I will have gained $500 training credit. So I can claim the entire $500 in 2024 if I attend any eligible training.
Excellent. Somebody said they registered a sole proprietor business, but they haven't really started operation. Do they need to file taxes?
No. That's the good
Okay.
thing about sole proprietor. But if it's a corporate business, even though the revenue is zero, you still need to file your corporate income tax. But for sole
Okay.
proprietor, if it's zero, you don't need to declare anything. You don't need to report anything in your income tax.
So somebody said they attended a university remotely in the US while working full-time in Canada. A portion of the tuition was reimbursed by the employer. Can they claim the balance portion as they are filing their taxes? How does this impact their taxes?
Yeah, for such, they need to get a document from the school. So there's like an arrangement between Canadian schools and US schools. So if that's it's not all schools that you're eligible for tuition credit. So if that school payment or that school is eligible, the school should be able to give you a document for income tax purpose.
So I'm asking about recorded. The session is going to be recorded. Aisha, please post the link to our YouTube channel. Later this evening, this particular session will be posted there, and then you can scroll through the different videos we have there and find this particular session. You'll see the same flyer, so you can identify it. Can you file the amount you paid as rent, or is it only rental income that you file?
Well, yes, you can file the amount. There's a rental tax credit, so you can file the amount you paid as rent. That would be part of the trillion benefit that the Ontario government pays to residents in Ontario. Yeah.
Okay. So this person moved to Canada 6 months ago through PR and started working in January. But at the moment they've stopped work, how can they file or add that to their tax documents? Additionally, they have OSAP support for college.
Yeah, so for such, if you arrived Canada June last year, you need to file your income
Came in
tax.
August.
In August, you need to file your income tax, and you need to factor in the income you earn before coming, the income you earn after coming. Yeah, even if the income you earn after arriving in Canada is zero, you still need to file as long as you're a resident of Canada as of December 31st, 2024. Yeah.
Okay, so this is the last question. Every other question will provide Mr. Sheye's email, and you prefer to be read by email or phone call?
It's a busy period. Phone call.
Yes. So email may be better.
Yes, they should
So
send an email. Yeah.
yeah, so Aisha will post Sashaya's contact details, his email on the chat, and you can copy from there. So you can reach out to him with your further tax questions. Like you said, this is a busy period, so you might want to just say, hey, maybe you ask him to help you with your taxes for this season, and then you can, over time, later on, work out how to learn more on how to do it yourself if you want to. But I told you I have one last question, and this was interesting because this is how many Nigerians find themselves. There's a very hardworking person here. They're working 2 full-time jobs. I don't know how they do it, but they're working 2 full-time jobs and they claim minimum tax credit. Okay, and they claim minimum tax credit on both of them. Okay, let me rephrase. What happens during tax filing season if I have 2 full-time jobs and claim minimum tax credit on both of them? Do I need to inform one of them? Do I need to inform one of multiple jobs and unclaim one of them?
Okay. Yeah, the question is not
Very
minimum tax
clear.
credit. Yeah, but what I would say is 2024 has passed. So when you file your income tax, they're looking at the numbers, the income you earned, the income tax that was deducted. Do you understand? That is what will determine if you owe or you get a refund. Do you understand? But there is no implication to inform your employer about minimum tax. Now, if the minimum tax, okay, when you say minimum tax, okay, maybe the employer deducted a lower tax. Yeah, you can always go back to your employer and tell them that, okay, I want you to increase the percentage tax you are taking from my income. As earlier said, if your employer is taking a lower tax amount, there's likelihood that you might owe the government when you file your income tax. So you can reach out to any of the employer or both of them that they should increase the amount of tax they're taking as a source, and they should be willing to do that.
Okay, great. So we have the YouTube channel link and the email address for Mr. Sheye in the chat box. I want to thank you very much, Sheye, for taking the time to make this presentation, especially since this is your season, the time when all accountants are like gold, and you know, they don't see daylight and they are busy crunching numbers late into the night. And to take out this time to share from your knowledge, we're very, very grateful. We appreciate it. So the contact details are in the chat box. Please reach out to Sheye directly and he'll get back to you as soon as he's able to do so. The recording of this session will also be on YouTube later tonight, and you can go over the sections that you were not very clear or that went too quickly for you, and you can get some clarity. So I'll hand over to Shea. Any closing remarks, and then Aisha, you can take it away.
Yeah, what I would say is that thank you guys. Thank you, NIROW, for the invitation to speak to Nigerians in the region. Nice connecting with you guys.
Thank you very much. And thank you, Uche, Uche of NNC, our partners who collaborated to put this webinar together. We're very, very grateful for your support and the partnership. It means a lot. It means a lot that we're able to collaborate in this way to lift up Nigerians in Canada as a whole. So thank you very much. And thank you for making the time to be here today. Yeah. Aisha.
Thank you so much, everyone. So the contact information, YouTube link, everything you need will send to you via email, latest by tomorrow, and we can take it from there. Bye, everyone.
Bye. Good night, everyone. Bye. Take care.